All right, so gosh, there's so many things to talk about right now. I just want to do a weekly kind of show and talk about what we're seeing in the market, as nobody really knows what the housing market is supposed to do right now, right? This is the weirdest housing market I've seen, not just in years, but in career. And what a lot of folks ask me is, hey, in regards to the Great Recession that you remember, 20 years ago, what is this like? And I honestly think that this one's a little bit more difficult for a lot of us that are originators, realtors, insurance, right, in California. It's not an easy market. So I think one of the biggest problems we have in housing right now is nobody knows what the market's supposed to do anymore. I mean, you've got people calling for a crash, but then you still have homes getting 10 offers. You've got interest rates that are low, but then go high, then go low, then go higher. And that shifts day by day. You have prices that are holding up in a lot of areas. Yeah, layoffs happening, but buyers are still jumping the market in a lot of places. So it's just weird, I guess is the best way to say it, right? So really what I think we need to look at first is the internet versus real life. Online, everything sounds catastrophic. Then you go to an open house and there's like 40 people waiting in line to check this property out. So the internet thinks the market's collapsing, but the parking lot at the open house disagrees, or the street, right? And you're seeing condos in San Francisco thriving again. So one thing I think, even though the internet thinks the market's collapsing, look at the housing or the housing open houses that we have and how many buyers are still waiting to check those particular properties out. So it's really demographic and geographically centralized, I think, based on what we're seeing. And of course, buyers aren't dead, they're just exhausted. And I think a lot of buyers out there will probably comment or agree with me in saying this this honestly feels less like fear and maybe more like burnout. I think people are tired of rates. Well, they're here, then they're there, then they're here, then they're here. I had a client, they're wanting to make an offer on a property in San Francisco, and we're saying, hey, let's just do a 10-day close, see if we could win there, right? So that's going to help with their strategy. And then I updated my analysis for them so they could see what was going on. And it was Friday after rates went up a bit. And she's like, oh my goodness, it's a 1/4% higher. What happened? And so I do a weekly digest. It's emailed to both uh, clients, agents, as well as financial advisors that we work with. And then I post a blog on it every Friday. So if you haven't checked it out, please check that out. But yeah, the market is just crazy. And then there's insurance concerns. So what about insurance? How if we know something's California fair plan or not, right? And then competition. The last thing, of course, is doom headlines. There's so many of them. And this is the busiest time of the year. Yeah, we're seeing more listings. I talked about this previously, more listings in this market this than last year, this time of year. Okay, well, there's also competitive offers. There's also, yes, rates and all these things, but really, buyers are still buying. Buyers still want a place to live. Buyers still want to have that dream of home ownership. And we're still seeing that take place. Buyers essentially, they still want houses, right? So why good homes still win? People don't want a house, but people want the house. And when everyone shows up, that's one that everybody jumps in on. And that's why we see turnkey homes moving, good school zones or districts moving. We see realistic pricing moves on particular properties. Now, the California thing. California is weird because you can simultaneously have affordability problems and people leaving, and at the same time, competitive housing demand. Again, it shows that this is all happening at once, right? And you're seeing that, of course, in California, yeah, some people are leaving the state 100%. But we're also seeing people move into the state. Yes, affordability is an issue, it's something we need to attack. And that's why I hope that, with the primary in July and, of course, November's ballot, things, whoever's in office, whatever that, new governing body looks like, has a plan in place to actually help this. And there's a couple things that we can discuss, and I'm not going to get too much into that. But what I would share is we're seeing markets like Merced soon, affordability migration. We're seeing people move to Antioch. We're seeing San Francisco condos popular and getting all cash offers. So what we are seeing is, yes, competitive housing demand. This is California. California is a very different market than the rest of the country, right? So what buyers are doing right now, this is a market that's causing people to be more flexible. They're looking at condos instead of single family homes. They're looking at outer markets instead of the core, as long as they can commute to work. As you know, so many folks are being called back to work. We're seeing adjust rate mortgages, seller credits, right? We have an escrow right now. It's a VA home loan in Novato, California. And we're working with the seller for something on this property. Great property, by the way, but days on market's over 100 days. And the seller's working with the buyers. So things like that we're seeing. So we're seeing some folks even wait for less than perfection. So one thing I'd share is really a good point. I want to just hit home with this as we wrap on this, short podcast, if you will. But I honestly think this market rewards people who could think long term and stay emotionally stable. Because if you react emotionally to every headline right now, you'll go insane. It's just crazy, right? We're seeing things that are shifting here, there, everywhere. Stay focused on what works for you. I had a client that the listing agent's digging in their heels. I want to stay at 650. I don't want to move. The buyers, my clients, I'm not comfortable going over 600,000 for anything. Okay, well then make that offer. Their days on market's nearly 40 days. Now they're going back and forth with negotiation because they listen to, they want to stay where they want to stay, what they're comfortable with. That's what I tell anybody right now. It's good to know, number one, how much you're approved for. Fantastic. Number two, more important, what fits your budget? What fits you? What ensures that you don't go back to living on top ramen and ready packs of salad as you did as an undergrad or when you're 18 years old, right? So these are the things that we tend to coach our clients. And that's one thing I'd remember. So again, I'm going to say this again. I honestly think this market rewards people who could think long-term and stay emotionally stable, because if you react emotionally to every headline right now, you'll lose it. It's incredibly true. So remember, we've got high rates, affordability problems, layoffs, economic uncertainty, but then homes are still getting multiple offers. So, any questions on this, or if you want to get that weekly digest, if you want to check out my blog, please do so. The link's below. Really appreciate you taking the time to listen to this today and truly hoping you have an incredible week.